Good morning. Welcome to another edition of our Delaware County Chamber of Commerce webinar series. We have another PPP seminar for you this morning. There are a lot of updates, a lot of additions, and we have Kim Stout and Sonia Smith from the Small Business Administration to walk us through all them. And once Kim and Sonia get through that portion of it, we will also have Brinker Simpson, our accounting firm, that will be answering any questions on the accounting and CPA side of it. This webinar is being recorded and it will be up on our YouTube as soon as it's uploaded afterwards. So we just want to remind all of our attendees to put any questions that they have in the Q&A. During this webinar this morning, we have Kim and Sonia who will be here from the SBA, and one of them will be answering the questions in the Q&A as they come up, or will be addressing them in the webinar. So any questions you have, please put them in there and not the chat, so we can make sure that we're answering them as they come in. So without further ado, I would like to introduce Kim and Sonia from the SBA, and they will be able to help us a little bit more about what's happening with PPP.
Okay, thank you, Trish. I appreciate that. And please note, I'm going to cover the economic injury disaster loan, the Paycheck Protection Loan, first draw, second draw, the shuttered venue operators grant, as well as information that came out about the EIDL targeted grant. So I know everybody has questions. I'm going to basically go from EIDL to PPP to shuttered venue operator grant. So you might want to listen to the presentation instead of dumping questions into the Q&A, because it's most likely I'm going to cover it in the presentation. And of course, if I don't, then feel free to put your question into the Q&A box so that Sonia can answer it while we're working through the PowerPoint presentation today. As Trish said, my name is Kim Stout. I am with the Small Business Administration out of the Eastern Pennsylvania District Office. Sonia Smith is our Public Information Officer, also out of Eastern Pennsylvania. We cover the 40 Eastern counties of Pennsylvania for the SBA and have been working quite a bit, especially in the last few days, of trying to get this information out to you from the Economic Aid Act that was passed on December 27th. Please note that the information that we are providing you today is effective as of today. Information changes. I was just explaining to the chamber that we had a bunch of information and notices come out last night. So we hope that you stay tuned and stay up to date with the information on our website. You can go to sba.gov/PPP or sba.gov/coronavirus relief. As soon as information is released, it is put immediately onto our website. We want to remind you that we do have our SBA resource partners. We have kept them up to date on the information. We have been working very closely with them of the SBA disaster relief programs for our small businesses, so that they can assist our small businesses on a one-to-one manner, so that if you have questions, you can certainly reach out to them, because we are giving this information, training them so that they can assist you during this time as well. We have our small business development centers. There's 16 of them across the Commonwealth. If you're in Delaware County, Widener University has our one of our small business development centers. I know they're doing a variety of webinars as well. Our Chester, Delaware County SCORE chapter, Sonia and I are actually working with Chester, Delaware County SCORE and our other chapters to host webinars on this information every Tuesday at 4 and every Thursday at noon. So if more information comes out, those are updated regularly. We have our Women's Business Center, our Women's Business Enterprise Center East in Philadelphia, as well as our WBC at Assets in Lancaster. And if you're a veteran business owner, we have our Veterans Business Outreach Center in Virginia, but we also have our own Shannon DeGilio in our office, who is the Veteran Outreach Coordinator. The Economic Injury Disaster Loan is something that you may already be familiar with. When the COVID-19 pandemic was declared a federal disaster in March of 2020, this program was offered through our Office of Disaster Assistance to take applications for working capital loans to assist our small businesses. We originally stated that this was going to close as of December 31st, 2020. However, due to the continuing pandemic, we have decided to make it open to small businesses through December 21. It will be December 31st, 2021, pending the availability of funds. This is available to small businesses, small agricultural businesses, and aquacultural businesses. It's also available to most nonprofit organizations, faith-based organizations, houses of worship. If you are a sole proprietor or independent contractor, you may apply. And if you own rental properties, you may also apply as well. This is a loan. It is a working capital loan so that you can pay fixed debts, payroll, bills that you were unable to pay because of COVID-19. The loan is not intended to replace your lost sales or profits, and it's not to be used to expand your business. As I keep saying, it is a loan. You do pay it back. It has 30-year terms, so it's paid over 30 years. It has an interest rate of 3.75% for small businesses and 2.75% for nonprofit organizations. If you decide to pay this loan back before the 30-year term expires, there's no prepayment penalty for prepayment. We're not asking for real estate collateral with this particular loan. We only ask for a collateral of business assets if you acquire a loan of 25% or higher. I'm sorry, 25,000 or higher. We'll file a blanket UCC-1 against the business assets, and we have personal guarantees that we ask for if you get a loan greater than greater than 200,000. The maximum that people can borrow is 2 million. However, because of the millions and millions of businesses that are in need, Office of Disaster Assistance had put a $150,000 maximum at this point in time. You can only apply for one COVID-related economic injury disaster loan. But if you have a prior disaster loan from a previous federally declared disaster, such as Hurricane Sandy, you may also apply for the economic injury disaster loan related to COVID-19. There's the website that you can use to apply for the loan if you have not done so already. It is a short application. What we have seen is that if you put in incorrect EIN numbers, incorrect bank account numbers, it's a challenge for the Office of Disaster Assistance to verify your information. So it does hold up the loan. If you're going to move forward with applying for this particular loan, please make sure that you put in accurate information and double check that you don't miss numbers, etc., because that does delay the process. At the district level, we do not have the ability to see the system to see if you where you stand in line, what the status of the loan, etc. So you will have to reach out for the contact the SBA Customer Service Center, and the 800 number is there, as well as the email address. I did email this PowerPoint presentation to the chamber, so as a follow-up, they can certainly send this out to the attendees today. Also part of that email are different links that will take you to specific information that we're going to reference today as well. With the passing of the Economic Aid Act at the end of December, there was a repeal of the Economic Injury Disaster Advance deduction from Paycheck Protection Program forgiveness applications. If you received an Economic Injury Disaster Loan advance as part of the CARES Act with your EIDL loan, and then you also received a Paycheck Protection Program loan and applied for forgiveness prior to December 27th, we were deducting the EIDL advance. So we are no longer asking for that. We are going to be working with our lenders to reconcile if you submitted that deduction as part of your forgiveness. For loans that were submitted, as I mentioned, we will be working directly with the lender to reconcile that. The lender is going to be responsible for notifying you, the borrower, of the reconciliation. The lender is also going to be responsible for re-amortizing the loan and notifying you, the borrower, of the amount of the next payment due, or advising the borrower the loan has been paid in full, whatever is applicable for your situation. If the amount remitted by SBA to the PPP lender exceeds the remaining principal balance of the Paycheck Protection Program loan, maybe you made a payment, the lender is going to remit the excess amount, including accrued interest paid by the borrower, to the borrower. Now, this is new information that was just posted on our website within the last day. And this is information that discusses the targeted EIDL advance, which I know most people were hearing about with the passing of the Economic Aid Act. So the targeted economic injury disaster loan advance provides businesses located in low-income communities with additional funds to ensure small business continuity, adaptation, and resiliency. Advances are going to be up to $10,000 and will be available to applicants located in low-income communities who previously received an EIDL advance for less than $10,000, or to those who applied but received no funds due to the lack of program funding. So with the CARES Act, I think it was mid to late summer that the EIDL advance funding had run out. So we're looking at applicants who did not receive the advance as well. You, the applicant, do not need to do anything at this time. Please don't submit another EIDL application. SBA will be reaching out to the businesses and the borrowers that qualify for the targeted EIDL advance. We will first reach out to the EIDL applications that have already received a partial advance. You will be contacted directly by SBA, and it will be coming via email. And it will have instructions to determine eligibility and submit documentation. Please note that all communications will be coming from SBA, and it will be from an official government email with the ending of sba.gov. We want to note that because we do understand that people reach out for information all the time, whether it's fraud or, whatever people are trying to do these days. But all communications from SBA will be coming from an official government email, and it's sba.gov. That is the ending part of the email. So you're probably wondering if you qualify for the targeted EIDL advance. Applicants that may qualify if you are located in a low-income community, and that's defined in the Internal Revenue Code. The applicant must be located in a low-income community to qualify. And additional details on if and how you qualify for that is listed on our website at sba.gov/coronavirus relief. You must also demonstrate more than a 30% reduction in revenue during an 8-week period beginning March 2nd, 2020 or later. If you meet the low-income community criteria, we will ask for you to provide gross monthly revenue, all forms of combined monthly earnings received, such as profits or salaries, to confirm the reduction. We need to have proof of that reduction. We'll be reaching out to those who applied for EIDL prior to December 27th as well, but did not receive an EIDL advance because of lack of program funding. These applicants will receive an email from us at the SBA with instructions to determine eligibility and submit documentation. Please do not reapply for the economic injury disaster loan. You will be contacted by us. Applicants that may qualify for the targeted EIDL advance if they might meet the criteria of the low income location and the reduction in revenue and have 300 employees or fewer. Business entities that normally are eligible for the EIDL program are eligible for the targeted EIDL loan. This includes our sole proprietors, our independent contractors, and private nonprofit organizations. Agricultural enterprises are not eligible, and all applicants may be asked to provide the IRS Form 4506T to allow SBA to request tax return information on the applicant's behalf. Again, in red, please do not submit a duplicate COVID-19 EIDL application. At this time, only prior applicants will be considered for the target EIDL advance, and SBA will reach out directly to you if you qualify. So now I'm going to turn our attention to the Paycheck Protection Program. Last week, the Paycheck Protection Program was rolled out for our minority, underserved, veteran, and woman-owned business concerns. They were able to reach out to community financial institutions to apply for PPP. They were also able to use our lender match program, which is on SBA.gov. At this point in time, as of yesterday, the Paycheck Protection Program was open to all participating lenders, and borrowers can apply for the program until March 31st, 2021. All participating lenders, you can go on to SBA.gov to find a participating lender. However, we encourage you to reach out to the bank that you've already done business with. If you already have received a Paycheck Protection Program loan, you might want to consider going back to them at this time for a second one. If you have not acquired a first round of PPP, we encourage you to reach out to the bank that you do business with as a small business owner. Ask them if they're offering the program so that you can apply for that with them. It is easier for a loan to be done if you have a relationship with that lending institution already. If you are not able to get a PPP from your lending institution, you can click on this hyperlink when you receive this PowerPoint, but you can also go to sba.gov/PPP to assist you in finding a lender. For the PPP loan, first draw, you haven't received it before. You can see the eligible small businesses, nonprofits, etc., that can apply. You have to be a small business. You have to consider your affiliates if it's applicable. You must have 500 employees or fewer. The entity types include sole proprietorships, independent contractors, self-employed persons, 50C3s, 50C19 organizations, and news organizations. So you have to have 500 employees or fewer. If you're applying for a second PPP loan, that eligibility requirement changes to 300 employees or fewer. With the passing of the Economic Aid Act, the Paycheck Protection Program is open to housing cooperatives, 501c6 organizations, and marketing destination organizations with no more than 300 employees. It's also open to entities with no more than 500 employees in the accommodation and food sector. Your NAICS code would start with 72 in that particular industry, in that sector. This changes as well for the second draw of the Paycheck Protection Program. You have to have 300 employees or less. Entities must comply with size standards, the eligibility criteria, and certain limitations. If you have questions about your size standards, you can go to your search engine, search your NAICS code, North American Industry Classification System, put in the type of business that you are, and it will give you a code. If you're applying for the first round of the Paycheck Protection Program, there is an application, the Form 2483. It's available on our website. Your lender may ask for additional information as well. So you can go to that form, look to see what kind of information is going to be asked of you so that you're prepared to submit your application to your lending institution. What can you use Payroll Protection Program funds for? the list is there. Payroll cost, including health benefits, mortgage interest, rent, utilities. With the passing of the Economic Aid Act, we are now allowing it to be opened to worker protection costs, uninsured property damage costs caused by looting or vandalism during 2020, certain supplier costs, and operational expenditures. Please note that to be forgiven, ultimately with the Paycheck Protection Program, you have to use at least 60% of these funds for payroll. So keep in mind, 60% for payroll, the other 40% for the cost listed there. If you have questions about the expanded new expenses, Sonia and I have noted the page in the interim final rule. That's going to be emailed to you after this presentation from the chamber. And it's on page 44 that defines what qualifies as payroll costs. And it also goes on to the next page about what is the defined as worker protection cost, as well as supplier costs and operation expenditures. With the Paycheck Protection Program, you can select a covered period anywhere between an 8 to 24 week period after you have the loan dispersed from your lending institution. So originally when this program was created back in March and April, you had 8 weeks that you had to use this funding. You now can select a period of 8 weeks to 24 weeks, whatever fits your businesses best. With the passing of the Economic Aid Act, they've developed a second draw of the Paycheck Protection Program. This has limited eligibility compared to the first round. Eligible borrowers who previously received a Paycheck Protection Program before may apply for a second one, but the maximum amount that you're able to apply for is $2 million. It's going to stay at a 5-year term for the loan, which is also the same as the first draw. Before you apply for the second draw, you have to make sure that you have expended or will expend the proceeds of the first Paycheck Protection Program loan and use it for eligible expenses before you ask for a second, or I'm sorry, before you just have the second loan dispersed. So you can apply for the first one. Maybe you didn't do that in 2020. You can apply now for the first one, and then once you have the expenses once you have your expenses used, your use of proceeds used, you can apply for a second draw as well. But you have to use the first one before the lending institution releases the funds from the second one. The second draw, you have to have 300 employees or less, and you have to show that you have a reduction of at least 25% in gross receipts between comparable quarters in 2019 and 2020. So you have to have proof that you've had loss of gross receipts. The primary example that I've been using with this is you go to 2019, look at second quarter, April, May, and June. You go to 2020, look at second quarter, April, May, and June. If you have a 25% reduction in gross receipts in 2020, you're most likely eligible for the second draw. There's a second draw application that's also available on our website. It's listed there as 2483 SD. When you're calculating your loan amount, it's 2.5 times the average monthly payroll cost from 2019 or 2020. If you are in the accommodation and food services sector, your NAICS code starts with 7.2. You may request with a calculation of 3.5 times the average monthly payroll cost in 2019 or 2020. You have to have proof that you're in this sector, okay? If you read the application at the bottom of, I think, of the 4th page, you can't just change your NAICS code to try to get more money. You have to have tax returns that prove that you're in this sector. it is requesting to have that documentation. So with the Economic Aid Act, the Paycheck Protection Forgiveness process or requirements are changing as well. We did receive a number of notices last night. New applications are posted on the SBA website. The EIDL advances will no longer be deducted. I covered that earlier. Forgiven paycheck protection loans are not taxable income. Expenses paid with the PPP loan funds are now tax deductible, and you want to make sure you consult the IRS for further details. Loan proceeds must be spent on payroll costs and eligible expenses. And remember, at least 60% of that has to be spent on payroll cost. You must maintain employee levels and you must maintain compensation levels. Noted there, SBA is developing a simplified forgiveness application for loans under $150,000. And honestly, they sent out a bunch of information on forgiveness last night. We're still combing through it, but it is all posted on the website. So if you need additional guidance, we do have the interim final rules and the new applications posted on the website. This is just the general information about Paycheck Protection Program, what the maximum round or maximum amount is for first draw, second draw. Interest rate is 1%. Payments are deferred. If your first payment is deferred until the date that SBA remits the forgiveness amount to the borrower's lender, or 10 months after the end of the borrower's loan forgiveness covered period, if the borrower is not applying for loan forgiveness. 5-year maturity, we're not asking for collateral, no personal guarantees, no borrower or lender fees payable to SBA, and the program's open until March 31st. So now we're moving on to another program, the Shuttered Venue Operators Grant. This information was starting to be released, I think, as of late last week. We are not currently accepting applications, but we wanted to get information out to our small businesses that may qualify for this particular program so that they can start preparing to apply. This is going to allow up to $15 billion in grants to applicants who meet the eligibility requirements and have been affected by COVID. The Office of Disaster Assistance is going to be the SBA office that handles the loans and administers the program. Eligible applicants include those that may qualify, or eligible applicants will possibly qualify for grants up to 40% of gross earned revenue. The maximum single grant award is going to be $10 million. We're setting aside at least $2 billion of the total program for eligible small operators with up to 50 full-time employees. There's the list of applicants who may be eligible for the Shuttered Venue Operators Grant. They include our museums, zoos, aquariums, movie theaters, live venues or promoters, performing arts centers, theatrical producers, etc. You had to have been in business by February 29th, 2020. You also must not have received a paycheck protection loan on or after December 27th. You are not prohibited from applying for this particular program if you already have an EIDL loan or plan to apply for one, or if you received the first draw of PPP prior to December 27th. This is just a quick slide to show you the different programs if you're trying to decide between applying for the Shuttered Venue Operators Grant and the Paycheck Protection Program. It shows that PPP is used for payroll cost. You cannot include it for independent contractors, and it is a forgivable loan if you use it the way that we're asking you to and require you to. The Shuttered Venue Operators Grant There are going to be eligibility requirements that you have to meet. You can use it for broader use of funds, and it's a grant. It's not going to be repaid. The COVID EIDL is a loan, and it's working capital as well. And note, applying for PPP after December 27th, you're not going to be eligible for the shuttered venue grant. So when you're looking to see how much funds you may be able to apply for through the shuttered venue operator grant, it's going to depend on actually when you were in operation. So if you were in operation on January 1st, 2019, the lesser of an amount equal to 40% of 2019 gross earned revenue, or $10 million. If you were in operation after January 1st, 2019, the lesser of the average monthly gross revenue for each full month you were in operation during 2019, multiplied by 6, or $10 million. So if you opened February of 2019, partial months are not included, but let's say you were open 10 months of 2019, you multiply your gross revenue by 6. If it's over $10 million, $10 million is the maximum that you can apply for. If it's under $10 million, it's the amount that you got when you multiplied. Again, we're not accepting applications yet. We're going to be opening the first applications to businesses that have suffered the greatest economic loss. Here is a schedule, and you can go onto our website and see how this is going to be done. There's first priority, second priority, third, and so forth. These are what you're allowed to use the shuttered venue operator grant funds for: payroll, rent, utilities, etc. So it's almost every legitimate business purpose. There are some exceptions. For example, operating leases, you had to be in effect as of February 15th, 2020. And then also with advertising, production, transportation, and capital expenditures, that's not what they want you to use the primary use of funds for. There are also things you're not going to be allowed to use the grant program for, or the grant funds for. You're not going to be able to buy real estate. You're not going to be able to make payments on loans originated after February 15th, 2020, make investments or loans, make contributions or other payments to or on behalf of political parties, political committees, or candidates for election, or any other use prohibited by the administrator. You have to keep records. This is a grant. You are going to have good record keeping, maintain documentation to show how you use the funds to be in compliance with the program. You're going to have to retain employment records for 4 years following the receipt of the grant, and retain all other records for 3. Additional information will be posted when it becomes available. In the follow-up email that we do have a link to our YouTube channel that gives a short webinar information session that's about 13 minutes about the program, but I think I covered almost everything they said on the slides that we're providing today. As I keep saying, information is coming fast and furious. Everything that we have released from SBA is immediately added to our website. So please continue to visit us at sba.gov/coronavirus. If you want email updates from us at the Eastern Pennsylvania District Office, we cover the 40 Eastern counties of Pennsylvania. You can go to our website and request updates. And you can also follow us on Twitter as well. Sonia sends out lots of information on Twitter. So I believe that is the end of my presentation. I know Sonia has been answering questions, I'm sure, and we'll hand it over to the next presenter.
Kim, thank you so much, Sonia. We really appreciate your diligence on the questions there. Now I'd like to turn it over to Chris McCabe and Bob Simpson from Brinker Simpson. They've been doing a lot of PPP webinars as well, and they are very knowledgeable about how to handle all things related to PPP. So Kristen and Bob, thank you for being with us, and I'm going to turn it over to you.
I think we are.
Okay, thanks, Trish. And thanks, Kim and Sonia. Kim, your summary up to date was very informative and very complete, and we appreciate SBA getting that information out so quickly. One of the comments that you made through your talk consistently, you used the word lender, and we've been preaching for the last 10 months now to make your lenders your friends. And you really want to love your lender, because the lender has a lot of power to make this program work smoothly for you. And we have seen some lenders who have really come to bat through this program, and we've seen other lenders that have really dropped the ball. So be very connected and very current with your lenders, and make sure your information goes through. Brinker Simpson is a local CPA firm, members of the chamber, and we're happy to help. We're going to skip a lot of the information that Kim had shared, and what we'll do is stick to a few issues that are more pressing and more, we'll say, feet on the street from our client base that they've seen going into the forgiveness application. We'll say applying for PPP1 if there was a mistake or an issue with the first loan, and then also the application for PPP2. First, on the forgiveness of the PPP1 loans, we have, oh yeah, well, disclaimer, please check with your own CPAs to make sure that we're not giving you tax advice, but check with them, make sure you guys are following the rules and getting this done, and make sure your CPAs are on board with this, because we've also talked to a few people that aren't that well on board. So we're going to jump around a little bit, but from a forgiveness standpoint, the new application is out, as Kim stated yesterday, and we have looked at it and we've reviewed it, and we do notice one large change in that if your loan is under 150,000 and you're requesting forgiveness, the SBA has removed the requirement to provide any documentation to the bank with the forgiveness application. You simply have to check the box attesting two certifications attesting that you had supplied the bank with the necessary information to get the loan, and that you attest that you used the money in the right way. But you don't have to support your application for forgiveness with any documentation if you're under 150. So if your bank is requesting that documentation, please educate them. If it's the same bank that you went to when you applied, they already have all of your information. So try to get them to make it as smooth as possible. This is new for them as well. The attestation is an important box to check and make sure that you, what the attestation says is that you were facing economic uncertainties when you borrowed the money and you needed it for your business. Essentially, that's what it says. So we had a client who applied for forgiveness and is now being audited by the SBA and one of the parts of the audit is they're asking for a relatively detailed narrative on why they needed the money, how they used the money, and what created the circumstance that their business required this money to survive. We don't know how that'll turn out. I mean, the company did have a decline in business. It did use the money in the right ways. So hopefully it works out, but that's the first SBA audit that we've seen. Don't jump to forgiveness. There are some other federal tax credit programs available based on payroll if you're in a declining business, or if you're in a business that was shuttered by the government for any reason. So be very careful when you go to forgive your PPP loan. If you use payroll to forgive the loan, that payroll is ineligible for these other federal credits. So some companies are using 100% of payroll to get loan forgiveness since they have a 24-week period to do so. And then they come back and they find that they could have used 60% of payroll, which is the minimum requirement, and 40% of other costs. And that other 40% of payroll that they didn't use may have been eligible for some federal tax credits. So before you go to forgiveness, and we've told our clients up to this point not to put their forgiveness applications in just yet. The rules are changing weekly, as Kim alluded to. They changed last night.
A lot came out last night.
Yeah, a big 80 some pages, I think, came out last night. So the rules are changing weekly, and they are, and the SBA and federal government is reacting to questions that are being asked, which is great because most of the rules are changing are in favor of the business owners. But don't jump to forgiveness at this point. If your business was in decline, either a 50% decline in 2020, or if you're in a 20% decline this year, now you can qualify for some very significant payroll tax credits, but you can't use the same payroll for PPP forgiveness and for the employee retention credit. So be very careful with that. I'm glad, Kim, that you hit on the shuttered venue, Save Our Stages Act. We're involved with that. We have some clients that are in the entertainment field who are very active in that. That's a tremendous program for venues that were shut down in the, or called in the entertainment, the hotel and hospitality field. Yeah, so it was a couple of things came up with our clients, and one of them was that a couple of our clients in between the PPP application and now have switched banks. Their PPP loan was with one bank and they've moved to another bank. So they have to go to bank number 2 now to get PPP loan number 2. And because of that, they're going to have to submit all of their original application information, including payroll records and all the supporting documents that they did in the first loan. So if you're still with your bank for PPP1, make sure your second loan goes to that bank if you can do it that way. Like I said, some banks performed very well during this period, and some were a little slow to react. Some of those slower banks actually picked it up towards the end of the first application period. So they're on target for this one. There is a local bank that will not accept PPP loans, even though you had your first loan. We won't name them, but you had your first loan with this bank. If you go back to them for a second loan, they're not accepting applications at this time.
I also heard a nasty rumor that there are a few larger banks that if you're not doing PPP2 with them, they're not giving you your SBA loan number, which you will need to apply for the second round. So try to gather your SBA loan number from wherever you can, because you do need it for the second round. Your first PPP loan number.
The again, and in forgiveness right now, a day ago or so, Pennsylvania came out with an announcement that they are not following the federal guidelines on the tax-free PPP proceeds. So according to Pennsylvania, Pennsylvania will tax that income for businesses. So be prepared. There's going to be a Pennsylvania income tax hit on your PPP forgiven loan amount, not like the federal. California was the first state to come out and not follow the federal guidelines. So I would expect other states to do the same thing. They're all in a money grab right now, and this is certainly one way to grab some more income for the states. In the second PPP loan, the way you are eligible is that you had a 25% reduction in revenue, cash receipts, however you want to term it, in one calendar quarter of 2020 over the same calendar quarter of 2019. That's for businesses that were in business for all of 19 and 20. The definition of what constitutes a reduction in cash receipts that Kim had referred to, the cash receipts term is a little misleading because, or gross receipts, what we thought when this first came out was that you have to just look at your bank statements for 3 months and compare those 3 months to the prior year. And whatever money you received for that period of time, if it was 25% below, then you qualify for this loan. Remember that if you have one quarter that's down 25%, but your other quarters are up 300%, you still qualify under this PPP loan. That's a weakness in the rule that was written. They tried to change that right at the last minute before they issued the PPP2 loan rules, but that was stricken. So you may have had a tremendous year, but a lousy quarter. You still qualify for the second loan based on the fact that you need that money for your business to operate. So the definitions came out as to how to prove your 25% reduction in, we'll call it revenue at this point. So we have on the screen here that you can use a quarterly internal financial statement using your normal method of reporting income and expenses. That can be an accrual method or it can be a cash basis method, whatever you use for your financial reporting. So you can take a report, and the banks should accept these, that are internal created reports that just show the sales reduction or a revenue reduction or a cash receipts deduction. You can use the quarterly bank statements that show a reduction. So if you're going to report on a cash basis, you can use a lack of deposits in that quarterly period versus the year before. Or if you have a tax return completed, which I don't know anybody who does at this point, and please don't call your accountants and ask for your tax returns to be completed, because they'll probably hang up. But if you do have a completed tax return that shows an annual reduction in cash receipts of 25% or greater, you can use that as proof. And if you have an annual reduction in 25%, you would have had at least one quarter that was down by 25%. So there's no other reason to prove your quarterly reductions. These are new business entities. So some companies had been formed in 2020 that would not have qualified for the first loan, but may qualify now based on payroll costs in 2020 for the second loan. So if you were not in business in 2019, well, let's go for the first one there. If you were in business in the third and fourth quarters of 2019, you have to show a reduction in receipts in any quarter of 2020 that was 25% less than either the third or fourth quarter of 2019. So if you were in business in the fourth quarter of 2019, but not in the second quarter, and the second quarter is where you took the hit in 2020, like most businesses did, you can compare that second quarter to the fourth quarter of 2019 to get your reduction. If you were businesses that were in the second, third, and first, second, and third quarters of 19, but in operation in the fourth quarter of 19, applicants must demonstrate gross receipts in any 2020 quarter 25% less than the fourth quarter. So you can use that fourth quarter if it was the only quarter you were in business. If you were not in business in 2019, but in operation on February 15th, 2020, and that's the strike date, so you had to be in operation in February 15th of 2020, you can use the first quarter of 2020 to measure against the second, third, or fourth quarter of 2020 to show a 25% reduction. So you would have had to been open in the first quarter and really hit the ground running at that point to show a great first quarter, allows you second, third, or fourth quarter to qualify for this second loan. So be very careful about how you're measuring the qualification for this loan. But if you do not have the 25% reduction, you don't qualify for the second loan. That's clear. What else do we need?
I think we talked about gross receipts.
Yeah.
I mean, did she go over about not submitting? I think we talked about
Yes.
2019.
I think that's all we have as far as what the extension of what Kim had put. If you have questions, you can ask them at this point or send us any questions to our email addresses, which are on the board.
I do have one frequently asked question that keeps coming up that I'm not sure about, and I'm not sure if Kim knows, is we have a lot of clients in the healthcare field, and there was a separate program with CARES, the Provider Relief Fund. And some of our clients don't know if they meet the 25% reduction of receipts because they don't know whether or not to include the provider relief funds. We can get guidance on that. And also, this is a Delco Chamber event. There were a lot of our clients that had Delco Strong grants, and we need to know if those should be included in receipts for 2020 versus 2019. Some clarification on the other programs and how they impact gross receipts would be really helpful for a lot of our clients.
I think we're good. There's a question came up, is there a headcount requirement for forgiveness for the second PPP loan? And the answer is yes. So all of the aspects of the first loan are included in the second loan as well. Headcount, salary reduction, all of those items. The only difference here is the 25% reduction in sales to qualify for this loan. And I think Trish will send it back to you. We're good.
All right, thank you so much. I know that Kim unmuted and then she came back, but Kim, do you have any clarification on the question that Bob and Kristen asked about the other loans?
Yeah, I just wanted to add, I couldn't hear everything that they were asking about. What specific program were you referencing?
The provider relief fund that went to it was based on their Medicare billing from 2018 or 2019. A lot of doctors' offices received money in their bank account and they don't know whether that's included. And then the state and local government money, for example, we in Delaware County had Delco Strong grants that were helped to use to pay rent and things like that. And Montgomery County, which is right next door, same thing. So some of our clients, if they take that out, they do meet the receipt substantiation, but if they don't, they will not qualify.
Can you guys email me that question? I'll research it because I don't know, but I know that we had a lot of notices in the IFRs and Q&As sent out, like you said, last night. Yeah. So if you want to email me that question, I will look it up for you and answer it for you.
Definitely. I didn't see it anywhere earlier. It could be in the 18-page one from last night, but that one we definitely need to get some clarification on. So I'll email you. Thank you for that.
Thank you.
All right, there's a couple questions here, and Bob and Kristen, are we still supposed to hold off on PPP forgiveness of the first loan?
It's a broad question that needs a specific answer, and typically our answer is if you're under the 150 in the loan amount, you really are going to get automatic forgiveness so long as you fill out the application correct. So we recommend that you get those applications in if you're under 150 and get your forgiveness. If you're over 150, we recommend that you meet with your CPA and see if you qualify for any of the federal employee retention grants first. And if you do not, and that's only to companies that have had significant business drop off. So if you do not qualify for any of those grants, then I would recommend that you get your forgiveness application in as well. If you do qualify for those grants, you want to be very careful. You want to apply for the grants and then get your forgiveness application in after you've separated your payroll costs for grant and for PPP. So if you're under 150, I don't think there's any reason to wait at this point. And that's from what I read, and Kim, you can confirm, that's about 85% of all the loans that were written were 150,000 and below.
Yeah, I think it was somewhere around that 65–70% of the loans were small loans under 150.
I think it's actually like 80%.
Yeah, I think it might be
like
higher,
almost close to 90.
Well, I might be looking at national numbers versus Pennsylvania, but the majority are 150.
It's like 90. The number of loans is close to 90, but I think that dollars is maybe under 150.
So another question is, did you mention a source for determining what qualifies as certain supplier cost and operation expenditures? That is, there are references available, and you can either get it, it's a very broad definition of what counts as supplies. And really what they're trying to do here is to help the companies that need help to get forgiveness. So it's a broad definition. I would reach out to SBA because SBA has a description of what's included in there. As the best
in our follow-up email, I do have the IFR to the Paycheck Protection Program amended by Economic Aid. And it does list on page 48 through 51 what the proceeds can be used for. So you can read that when you receive this email, and it will show what those definitions are.
That's for the covered supplies.
Right. Okay. And the other is what payroll programs are available for tax credits. So the employer retention credit, which was available under the First CARES Act, was not available for companies that were getting PPP loans in the first go round. And then in December, when the new act came out, the employer retention credit, ERC, became available for companies that did get PPP loans as long as you don't use the same payroll for both computations. Another question is, what date is used to determine the starting headcount requirement for PPP loan 2? At the
I would imagine that, and Kim can correct us if I'm wrong. We're getting this question a lot, and I would imagine it would begin just like the first one, when you get your deposit, would be the start of your covered period. I'm not seeing anything that is different than that, but Kim may know more.
Well, yeah, I mean, if you're applying for a Paycheck Protection Program for 10 employees and you're approved for 10 employees, you want to maintain a head count of 10 employees. Obviously, there's some safe harbors out there. If somebody resigns, you know, there are exceptions, but for the most part, if you apply for a certain number of employees to cover an 8-week period of payroll, you want to have that number when you're done with that covered period.
I think people are going to run into problems with this a little bit. I think it's a little bit more nuanced because a lot of people are going to use their 2019 count that they use for the first loan, and that it's been an entire year. So people who have less employees than that are probably going to have more money, and I think that they have to either bring those people back, or I'm not sure how to handle that. But the covered period should start the same as it did the last time, I guess.
Well, and two, I mean, if you had 20 employees in 2019 when you originally applied for the Paycheck Protection Program, and now you have 10, you shouldn't be applying for 20 employees to cover payroll. You should be applying for what your payroll is now.
Yeah, that's correct in practice, no question.
And I think that's going to be a problem, because a lot of people are going to want to just do 2019 because it's easier and they don't have to redo everything. And I mean, in an ideal world, they would bring all of those people back now in 2021, but that's not going to be an option for a lot of people. So I wish that the guidance says whatever, whichever was lesser of those two payrolls, but that could potentially be an issue for people. Right. That's what the loan amount does. Brendan has his question is, but the application calculates average monthly salary from 19 or 20 and gives you the option. I agree, and that's why we're getting these questions. And I think people are going to run into a problem where they have more money than they need based on the rules, but I don't see anything prohibiting that from happening.
I'm sure as SBA receives more of those questions, guidance will be issued.
Yeah, and also, if you get 24 weeks, right? So it's based on 2.5 months. So you get 24 weeks. So assuming if you have the 10 people and you cover them for 24 weeks, I think that should be fine. And that might be coming into play as well.
Well, I want to thank everybody for taking the time today. Kim and Sonia from the SCA, Kristen and Bob from Brinker Simpson, thank you for sharing your expertise and guidance with us and the Chamber membership and businesses around the region. We will follow up with everybody that registered for this webinar with the slides and the information that was provided this morning. And this will also be up on our YouTube channel. So at any time, if you'd like to reference the information that was shared, please do so by visiting delcochamber.org, and it'll bring you to our previous webinars. So I want to thank everybody again for joining us this morning and looking to the Delaware County Chamber of Commerce as your resource during all of this. Have a great day and stay warm today. Thank you.
Thanks, guys.
Thank you.
Thanks so much.